Hello, ladies and gentlemen, and welcome to our interview with Matthias Coessens. Matthias is a managing director at Europe, EMEA, and co-founder of at ElysianNxt. ElysianNxt. And ElysianNxt is a pioneer in real-time enterprise-wide risk and finance software solutions. It enables financial institutions around the world to react faster and cheaper to the never-ending regulatory demands with innovative software based on the latest technologies. Their primary focus are IFRS 9, BASEL IV, and asset liability management. Matthias, thank you for your time and coming to our interview today.
Thank you, Boris.
Thank you. So, Matthias, could you tell us a short story about ElysianNxt and what are you guys up to these days?
So our company started in 2017. We founded the company in April 2017. Effectively, we all have roots with a Belgian company called Financial Architects. With Financial Architects, some of us did do some projects in Southeast Asia. And then in 2012, Financial Architects got acquired by Wolters Kluwer, where we kept on working for Wolters Kluwer in Southeast Asia for some time. And after a couple of years, we wanted to feel the dynamism of a young company again, do our own thing, make use of the latest technologies. So we founded a company in Belgium, which then also set up we also set up the development center in Bangkok, Thailand. Yeah, so that's where most of our people are based. We focused on the regulation of IFRS 9 at first from 2017, so convincing a lot of financial institutions in Indonesia and Thailand. And then since effectively end of 2019, we also looked back at Europe. That's where I'm based for the moment, where we are now investing in resources also to bring effectively the successful solution from Southeast Asia, now also bring it into the European market. Yeah. What are we up to these days? So we, as you introduced us, we are making use of the latest technology available. Without going into too much detail, that talks about microservices architecture, data streaming platform. It's completely cloud native, although it can be deployed on-premise also, so a whole variety of deployments. And we're focusing on regulatory risk calculations, such as there are IFRS 9. That's already a standard which is in play for quite some time. But of course, now with the new Basel updates that are on the horizon, coverage of Basel III, what under Basel III, the credit risk, obviously, standardized approach and internal ratings-based approach, liquidity risk management, interest rate risk in the banking book, CVA, SACCR, to name a couple of terms there. That's what we cover. What we're doing currently is of course, we're looking at those institutions that want to have a very fast simulation-ready platform. What do we mean with that? I mean, the whole pandemic has effectively shown us that there's a need to be able to respond very quickly to changing economic circumstances, to be able to run almost on-the-fly simulations. And with the technology that's available nowadays, that's very much possible. As in, we provide a platform for risk users to just change some parameters and immediately see the impact of, let's say, a change in model to the risk-weighted assets, to the IFRS 9 expected credit losses, to changing macroeconomic circumstances, and so on and so forth. Okay. So, it's a mouthful, but that's in short what we're doing.
Yeah, perfect. And how do you differ from other software providers? And what are some examples of your customer use cases, perhaps?
So how are we different? First and foremost, the speed at which we can do calculations. I would say we're at least 80% faster than the traditional players out there. To give an example, I mean, it also goes a bit hand in hand with the need for stress testing and simulations. Imagine it takes you an overnight batch to end a simulation, how many simulations, like 24 hours, how many simulations are you really going to run as a risk user? So what we're doing is, whereas these traditional type of, let's say, RWA or ECL calculations tend to take hours, we're doing it in minutes. So it goes a lot faster. So that's, I would say, the very first and foremost important differentiator. So that is enabled to us by the technology. Second is the cheaper total cost of ownership. So the implementations that we do, also making use of the technology out there, are at least 50% shorter, which then lead, of course, to lower cost of ownership. The platform is also, I mean, making use of different technologies. It can be agnostic to any operating system, any database, which can also lower the total cost of ownership. And then last but not least, as it's cloud native, it's ready to be deployed in the cloud, in a hybrid form or on-premise, and even as a SaaS solution. So I would say cheaper, faster, and last but not least, we built a lot of functionality inside the product. So we actually put the regulatory requirements inside the application itself, allowing organizations to quickly run what-if analysis when regulations are about to change. So we're now engaging, for instance, already on some quantitative impact studies with our clients. One example is, for instance, in Australia, I think about a month ago or 3 weeks ago, they officially announced BASEL IV, as in not longer draft, but the final regulation. So we're now looking at doing a number of quantitative impact studies there, whereby they want to use our application to run everything according to the latest BASEL III requirements, and now comparing those with the BASEL IV regime, which is upcoming.
Interesting. So how has COVID impacted you and your clients, and perhaps what are your insights on how the pandemic have impacted the way organizations approach risk management in your sphere?
Yeah, for us, I mean, for us in the end, COVID will probably be an accelerator to our business. The need for running more scenarios, more what-if analysis will only increase. The very short-term questions that we got from our clients were more with regards to the payment relief schemes that the governments all of a sudden put in place. So from one day to another, governments announced that, okay, we expect the banks to give payment relief or a grace period for 6 months. But not every system in the banks were ready to handle that. So those were some of the questions that we got from our clients, which we then managed for them to run a couple of simulations. What would be the impact of having such payment relief schemes and so on. Longer term, other impacts we see obviously are changes to the models, to the probabilities of default models, which did not always include, for instance, sector-based segmentation. I would say probably there was like an SME segmentation and a wholesale segmentation, and then a couple of others more. But nowadays we see that the tourism sector has been massively hit, while maybe the supermarket business has not been hit at all, on the contrary. So we see that our clients have gone into remodeling exercises quite a bit. And there again, I mean, the need for, okay, if we remodel, okay, what's the impact? They want to see immediately what's the RWA impact, what's the expected credit loss impact, because you don't change a model just overnight without knowing what the impact is going to be. Yeah.
So, from your perspective, what are the biggest risk, the biggest risk and compliance challenges for your customers? How are these challenges changed since the outbreak?
Well, I mean, one of the main things that we hear also from our clients is that they are, I mean, because of this payment relief plans that have been put in place in a lot of countries, a lot of the customers, a lot of our customers have their first indicators being almost taken away from them. What do I mean with that? Is that, I mean, traditionally, one of the very basic indicators for any credit risk is, for instance, days past due. Now, once your client misses one payment, it's already a very good indicator that probably the client is having some difficulties. However, when there is the payment relief, you don't know, your client does not have to pay back anything. At the same time, you don't know whether the client is in trouble or not. So in the coming months, when these payment relief schemes are ending or have ended, now all of a sudden you could go from the last, the last snapshot you had as a bank was like, oh, they're 0 days past due. Now they might be past due for quite some time and they might be in trouble. So banks have been flying blind a little bit with regards to that, because they had no real feel. Yes, the client has gone for an extension, but do they do that because they have the option to, or do they do that because they have to go for the extension? It's probably just one side effect. It depends from client to client what the specific biggest risk is for them at the moment. From a regulation point of view, we do know that Basel IV has been extended. I mean, the deadline has shifted with a year. I do feel that regulators are now going to stick to that date of 2023. I mean, first indications, I said, APRA, Australian regulator, has already officially announced. They're always one of the trendsetters. So we do expect that the other national bodies to follow there. Yeah.
Okay. I want to hear your personal opinion. What is a commonly held belief in, as it relates to risk management that you strongly disagree with?
That's an interesting one. What's the common belief? Well, I can't immediately think of something where I say, okay, this is something I completely disagree with. I think there should be, in a way, there should be much more. I mean, there's already a case going on whereby there's more integration between finance and risk management. I would say that there was a good initiative, IFRS 9 was a good initiative to bring these two very separate worlds together. Finance was all, I mean, in the past, only looking what happened, just reporting what happened. Risk management was reporting usually what happens next year, I mean, in the next 12 months. Now they try to combine these both worlds, which in principle was a very good idea. I would now say that still, I mean, the IFRS 9 in general has posed quite some challenges because different organizations using completely different techniques how to do it. I would say there, I mean, the whole Basel regime is a bit more prescriptive, is a bit more rules-based rather than principles-based. I'm not saying one has to be completely rules-based, because you, of course, have very different organizations that all have to comply with the standard. But at the same time, some more, maybe some more guidance from the national bodies and could be helpful there with regards to how to implement something very important like expected credit losses. Yeah.
Mm-hmm. So also, from your opinion, what, as it relates to risk management and what you do, guys, what's something that your clients should start doing right now that they are not doing, or maybe another way around, what they should stop doing that they are doing? That's kind of your personal opinion.
I mean, first and foremost, in my opinion, banks should be running a bank. They should not be trying to comply with regulations. I mean, I'm sure a lot of bankers will agree with me, although it's easier said than done. I mean, they get more and more regulations thrown at them. But if you see the almost like bigger institutions having almost armies of people that are just trying to comply with another and another and another regulation and spending a lot of time in Excel, first and foremost. They try to do everything. I mean, some big organizations try to do everything in-house also. They try to build their own software to comply with these things. And it might be a reason they might say, well, yeah, there is not, the platforms are not there to cope with our organization. That's also a possibility, but I think there is probably a way for vendors and bankers to get together in a much more efficient way. We feel that in a way, there's still too many banks relying on too many people just to comply with the regulations, whereas these things could be outsourced. I mean, granted, there have to be the correct system providers have to be there, but I think there's a way for bankers and system providers there to better cooperate. So I think that goes a bit, I think it answers your questions from both sides. What do they have to do less? What do they have to do more? It's actually, yeah, that's my opinion.
Okay, okay. Let's tell us a little bit, what are the major trends in your space and what we should expect from you in the future?
So the major trends we see, well, in the general space, I see that we will need to comply with more and more frequent reporting, more and more, I mean, the reporting itself is not something we do, but of course we do the calculations that feed the reports. We see that regulators are now going into, rather than fixed format reports, they go into more data dumps. It's maybe a simplified term, but effectively it means just giving, if you're a bank with 5 million loans, just giving on a loan by loan level, what's the expected credit loss, what's the RWA, what's the exposure, and so on and so forth. Just almost like data dumping that to the regulator. That's a trend we're seeing. Some countries are already doing that. That's only going to increase. But at the same time, I think the frequency will increase. Where some banks are still reporting certain things on a quarterly basis, okay, most on a monthly basis, but still I think frequency will increase. I think COVID has also shown that some regulators have asked for more almost daily liquidity management reports. I think that's going to come from our point of view. So we're going to continue investing in that, obviously. We're going to continue investing in making sure that we're up to date with the regulations. If tomorrow there is like a new update from the EBA, for instance, on certain Basel IV requirement, we're going to immediately put that in the product so our clients can run their what-if scenarios with the updated regulation. So I think that those are the main focuses. And then to use one of the buzzwords, I mean, there's going to be much more artificial intelligence, of course, although I don't like to use that word too often because there's too much under the umbrella of artificial intelligence, in my opinion. It's a bit more like, I would almost say it's like introspection, where the systems can actually look at trends that develop within the reported numbers and within the calculated numbers, a bit more like that rather than trying to label everything as artificial intelligence.
Okay, fantastic. And just summarizing, if someone who is listening to this interview would like to walk away with one or two major takeaways, what would it be?
Well, my point is a bit like, okay, are you currently very happy with your system provider, or do you feel that, okay, it's taking very long to calculate the process? I'm not in a position whereby I can run a very quick simulation, not taking any shortcuts, but just run a very quick simulation just myself without needing the help from IT to give me a sandbox environment. If you feel like that, and you're also still thinking, although I am spending a lot of money on my current implementation application, then I would just say, okay, let us prove that everything I'm saying here, don't believe a word I'm saying, let us prove it to you via an easy seeing is believing kind of concept, proof of concept, whereby we show you, okay, this is how it looks on your data, and then try it out.
Fantastic. Is there something that you want to add?
No, I just I'm very interested to follow the risk community, and I mean, keen to hear feedback on items we're working with, on items that are living in the industry. Of course, I'm seeing it from my angle. I'm looking at it more from a credit risk point of view. Other people might think, oh, for me, operational risk is the most important bit. That's, of course, everybody looks at it from his or her role. Yeah, but yeah, I'm very interested to follow the developments, and yeah, keep up the good work.
Thank you, Matthias. I wish you and your company a rapid growth, and hopefully we will continue our interview on specific topic in a few months.
I'd love to. Thank you.
Thank you.
Okay.